Hello, and welcome to our Alaska Statutes video for finders. Before we begin, let's go over some foundational information that is crucial for anyone working with surplus funds in Alaska. In Alaska, excess proceeds from tax sales are usually managed by the Finance Department, the Real Estate Department, or in some cases, the Clerk's Office. The structure of these departments varies by region. For example, in Anchorage, the state's largest city, their population size supports a dedicated real estate department, while in Fairbanks, it falls under the purview of financial services. Alaska has some unique geographic and population characteristics. The state is divided into boroughs and census areas, some of which are sparsely populated. A census area typically represents regions without borough governance. However, over time, as more people settle in these remote or uncharted locations, there is an eventual point where population growth can trigger state mandates for services, such as public schools. As the population in certain regions increases, the need for local infrastructure, like taxation systems, grows as well. An interesting example is some census areas where the region as a whole does not impose property taxes, but there may be one city within that area, where the population is concentrated, that has its own local tax system. In this case, the city will levy property taxes to support municipal services. These tax systems typically fall under what is known as home rule, which grants cities certain powers to manage their own taxation and governance. This is codified under Article 3 of the Alaska State Statutes, which gives cities the right to impose taxes under their local ordinances. If you're conducting research or trying to understand how these systems work, your best starting point would be to consult the Alaska Boroughs Wiki list. This will give you insight into the population and governance structure of each area. In cases where you're dealing with an unorganized borough, areas without formal borough governance, your search should be directed to the Finance Department within the specific city in question. The city's Finance Department can clarify whether they conduct tax sales, and being under home rule, they will provide detailed information about their local tax ordinances and systems. Alaska's process for claiming excess proceeds from tax sales is also quite distinct. According to state statutes, there is a 6-month window to claim these funds once the sale has been completed. We'll cover this process and the relevant statutes in greater detail as we move through the video. While we have a complete online list of links for Alaska, please note that this is currently in beta, and we do not make leads available outside our website. For now, we are continuing to refine and develop this data to serve you better. If you have any questions or need more information as you proceed through the video, we encourage you to join our community on Facebook at facebook.com/groups/excess-proceeds. Our group is a great resource for finders, and we're happy to assist with any further inquiries. Enjoy the video, and we look forward to helping you navigate the Alaska statutes for surplus funds. Section 29.45.010. Property tax. This section outlines the general authority for municipalities to levy property taxes. Here's a quick breakdown of the key points, specifically relevant for finders working with tax excess proceeds. Unified Municipality Authority, subsection A. Unified municipalities have the power to levy a property tax. This can happen in 3 ways. Area-wide property tax for services that cover the entire borough. Non-area-wide property tax for areas outside cities but within the borough. Service area tax for specific services in a designated area. City classification, subsection B. Home rule and first-class cities have more flexibility in levying property taxes but must follow guidelines under AS 29.45.550 to 560. Second-class cities have restrictions, and their tax levies must comply with AS 29.45.590. Tax assessment and collection, subsection C. Any property tax levied on real or personal property must be assessed, levied, and collected according to the procedures set in this chapter. How this relates to surplus funds. While this section explains the authority to tax property, finders should understand this framework to recognize the origin of tax liens that can lead to excess proceeds. Taxes that go unpaid result in liens, and subsequent sales to satisfy these debts may create surplus funds. This knowledge prepares finders to speak confidently about the process, but the focus should remain on the surplus proceeds that arise when properties are sold for more than the outstanding tax debt. Section 29.45.020. Taxpayer Notice. This section mandates that municipalities provide specific notices to taxpayers when they levy and collect property taxes. Here's a breakdown that's relevant to finders. Taxpayer Notification, subsection A. When a municipality collects property taxes, it must provide taxpayers with detailed information regarding state financial aid for public schools, retirement of school construction debt, and community revenue sharing. This includes the total amount of state aid allocated to the municipality, a millage equivalent chart that shows the equivalent property tax rate, in mills, of the state aid received for the current and previous year. Key points on notice distribution. The notice must be provided either with the tax statements sent to taxpayers or published in a local newspaper for 3 consecutive weeks within 45 days after the final adoption of the municipal budget. Compliance requirement, subsection B. To receive community assistance funding under as 29.60.850 to 29.60.879, municipalities must comply with the taxpayer notice requirements. The state can withhold funding until compliance is demonstrated. How this relates to surplus funds. Although this section focuses on taxpayer notification, it helps finders understand the framework of property tax collection and how it supports municipal services. Unpaid taxes from these levies lead to tax liens and potential property sales, which may generate surplus funds when properties are sold for more than the owed tax debt. Finders should recognize that this information can be valuable when discussing tax-related processes with prior homeowners, helping them convey a professional understanding of how taxes contribute to the cycle leading to excess proceeds. However, the primary focus remains on surplus recovery, and this section builds a foundation for that knowledge. Section 29.45.052. Tax deferral for primary residences. This section allows municipalities to establish property tax deferral programs for eligible individuals. Here's a summary for finders. Eligibility for deferral, subsection A. Municipalities can pass ordinances to defer property taxes for individuals who own and occupy the property as their primary residence for at least 10 consecutive years, have an income at or below federal poverty guidelines set by the U.S. Department of Health and Human Services. Application process and payment deferral, subsection B. Annual application. Individuals must apply each year for the deferral and provide proof of eligibility as required by the local ordinance. Deferred taxes. The taxes do not become due until the property changes ownership, and no interest is charged on the deferred amount during this time. How this relates to surplus funds. Though this section focuses on deferring taxes, it's important for finders to be aware that properties with deferred taxes may still end up in tax sales if the deferral ends and taxes remain unpaid when ownership transfers. This insight can help finders anticipate future opportunities to recover surplus funds from such sales. Understanding tax deferrals also enhances your professionalism when speaking with former property owners or their representatives, particularly when explaining why a property entered a tax sale and if surplus funds are available. While finders should primarily focus on surplus fund recovery, those working pre-foreclosures may consider it a good deed to inform an owner about their potential eligibility for a tax deferral. Becoming knowledgeable about both surplus funds and how foreclosures are avoided strengthens your position as a professional in the tax industry. Section 29.45.070. Mobile homes. This section clarifies the tax classification of mobile homes and similar properties for tax purposes. Here's a breakdown relevant to finders. Classification of mobile homes. Mobile homes, trailers, and similar structures permanently affixed to real property are considered real property for taxation, unless a local ordinance specifically classifies them as personal property. Exclusions. This section does not apply to mobile homes or house trailers that are unoccupied and held for sale by businesses selling mobile homes. These unoccupied homes are excluded from the real property classification for tax purposes. Definition of mobile home. For this section, a mobile home refers to the same meaning as manufactured home, under as 45.29.102. How this relates to surplus funds. For finders, it is important to understand the tax classification of mobile homes because it can affect the treatment of these properties in tax sales. Mobile homes classified as real property can be subject to property tax liens, which may lead to tax sales if the taxes remain unpaid. The proceeds from such sales could result in surplus funds if the property sells for more than the tax debt. Section 29.45.090. Tax limitation. This section establishes limitations on how much a municipality can levy in property taxes within a given year. Here's the breakdown relevant to finders. Ad valorem tax limitation, subsection A. A municipality cannot levy a property tax that exceeds 3% of the assessed value of all taxable property. All properties subject to the tax must be taxed at the same rate. Revenue and property value limits, subsection B. Municipalities, or combinations of municipalities in the same area, cannot collect more than $1,500 in tax revenue per person within their boundaries. Exceed property value limitations based on a formula that multiplies the percentage, outlined in subsection E, by the average per capita property value in the state and the municipality's population. Tax revenue apportionment, subsection C. If multiple municipalities in the same area attempt to exceed the limits, the Commissioner will intervene to divide tax revenues based on need, services performed, and public interest. Population determination, subsection D. The Commissioner determines population using U.S. Census data or other reliable population data for the purposes of tax limits. Percentage limits based on tax rates, subsection E. Tax limits are adjusted based on the municipality's total tax rate, as determined under as 43.56.010, b. The percentages are 375% for tax rates not exceeding 18 mils. 300% for tax rates between 18 and 19 mils. 225% for tax rates above 19 mils. How this relates to surplus funds. While this section details tax limitations, finders should understand these restrictions because they influence how much revenue a municipality can collect from property taxes. This is important for predicting potential tax lien sales, which may lead to surplus funds when properties are sold for more than the outstanding tax debt. For finders, knowing the tax limits helps them understand the tax environment in different municipalities, particularly in areas where high tax rates may lead to more frequent property sales. The focus remains on identifying opportunities for surplus funds, but having a strong understanding of how property tax systems work will further establish finders as knowledgeable professionals in the industry. Section 29.45.160. Assessment Roll. A. The assessor shall prepare an annual assessment roll. The roll must contain 1. A description of all property subject to an ad valorem tax. 2. The assessed value of all property subject to an ad valorem tax. 3. The names and addresses of persons with property subject to an ad valorem tax. B. The assessor may list real property by any description that may be made certain. Real property is assessed to the record owner. The district recorder shall at least monthly provide the assessor a copy of each recorded change of ownership showing the name and mailing address of the owner and the name and mailing address of the person recording the change of ownership. Other persons having an interest in the property may be listed on the assessment records with the owner. The person in whose name property is listed as owner is conclusively presumed to be the legal record owner. If the property owner is unknown, the property may be assessed to unknown owner. An assessment is not invalidated by a mistake, omission, or error in the name of the owner, if the property is correctly described. Some boroughs have this assessment roll online and available for viewing. Section 29.45.290. Validity. This section emphasizes the legal validity of certified assessment and tax rolls, even if there are mistakes or errors. Here's a breakdown relevant to finders. Binding nature of assessment and tax rolls. Once an assessment or tax roll is certified, it is legally valid and binding on all individuals, regardless of any defects, errors, or omissions in the assessment process or the associated proceedings. How this relates to surplus funds. For finders, understanding this section is important when dealing with tax lien sales that lead to surplus funds. Even if there are minor mistakes or inaccuracies in the assessment roll, such as a misspelled name or an error in property description, the certified tax roll remains valid. This means the property sale and any resulting surplus funds are also legally valid, despite any procedural defects. This knowledge can help finders navigate situations where property owners or their representatives may question the validity of a tax sale due to an error. By knowing that certified rolls are binding, finders can proceed confidently with recovering surplus funds, reinforcing their professionalism in the industry. Most importantly, you are gaining foundational knowledge to understand how tax collection works for the entire spectrum. Section 29.45.300. Tax liability. This section outlines the personal and property tax liability for assessed property. Here's a breakdown relevant to finders. Property tax liens, subsection B. Property taxes, along with any penalties and interest, automatically become a lien on the property. This lien holds priority over all other liens or encumbrances on the property, meaning it must be satisfied before any other claims. How this relates to surplus funds. For finders, understanding tax liability and liens is essential because unpaid property taxes result in tax liens. These liens can lead to a tax sale if not paid, and any surplus generated from the sale, after satisfying the lien and associated costs, creates the surplus funds finders aim to recover. Knowing that property tax liens take priority over other claims helps finders explain why certain debts must be cleared before surplus funds are distributed. This knowledge not only improves a finder's professionalism but also helps them better navigate the process of recovering funds from tax sales, ensuring they can answer questions from owners or their representatives confidently. Section 29.45.320. Real property tax collection. This section outlines the procedures municipalities must follow for collecting delinquent real property taxes. Here's a breakdown relevant to finders. Foreclosure of delinquent tax liens, subsection A. Municipalities are required to enforce delinquent real property tax liens through annual foreclosure unless an ordinance specifies another method. This means properties with unpaid taxes can be foreclosed on by the municipality each year to recover the owed taxes. Additional enforcement, subsection B. For properties like mobile homes, as described in AS 29.45.070, or taxable interests in tax-exempt property, if taxes are not paid, the municipality can take personal legal action against the taxpayer in district or superior court. This is in addition to other methods of enforcing the tax lien. How this relates to surplus funds. For finders, understanding the foreclosure process for delinquent taxes is important, as it directly leads to tax sales. If a property is sold due to unpaid taxes, Any amount collected over the owed taxes and penalties results in surplus funds, which finders seek to recover for former property owners. Additionally, knowing that municipalities have the option to pursue personal legal action against delinquent taxpayers highlights another way tax liens are enforced. This can help finders explain why certain properties face foreclosure and why surplus funds become available after the sale. Understanding the foreclosure process strengthens a finder's ability to navigate surplus fund recovery professionally and efficiently. Section 29.45.330. Foreclosure List. This section outlines the steps a municipality must follow when initiating foreclosure proceedings for delinquent property taxes. Here's a breakdown relevant to finders. Municipal duties, subsection A. Each year, the municipality must present a petition for judgment and a certified copy of the foreclosure list for properties with delinquent taxes from the previous year to the Superior Court. Publish the foreclosure list for 4 consecutive weeks in a newspaper or, if no newspaper exists, post the list in 3 public places for at least 30 days. Mail notices within 10 days after the first publication or posting to the last known owner, informing them of the foreclosure proceedings, a description of the property, and the amount due. Foreclosure list requirements, subsection B. The list must be arranged alphabetically by the last name and include the last known owner. The property description is listed on the assessment roll. The years and amounts of delinquency, penalty and interest due. A statement that the list is available for public inspection at the clerk's office. A statement that the list has been presented to the Superior Court with a petition for judgment and decree. Legal effect, subsection C. Completing these requirements has the same legal effect as filing an individual complaint and serving a summons for each property on the list. It essentially serves as the official initiation of the foreclosure process for all properties listed. How this relates to surplus funds. For finders, the foreclosure list is a key resource. Properties listed for foreclosure due to delinquent taxes may be sold at tax sales, potentially generating surplus funds if the property is sold for more than the amount owed in taxes, penalties, and interest. By understanding how municipalities publish and distribute foreclosure lists, finders can better identify opportunities for surplus funds recovery. The foreclosure list provides important information, including the owner's name, property details, and the delinquent amounts, helping finders pinpoint properties that may have surplus funds available after a tax sale. This understanding enhances a finder's ability to act professionally and efficiently in recovering funds on behalf of former property owners. Section 29.45.340. Clearing delinquencies. This section provides property owners the opportunity to clear their tax delinquencies before the property is transferred to the municipality. Here's a breakdown relevant to finders. Clearing delinquencies. While the foreclosure list is being published or posted and up until the time the property is transferred to the municipality, the property owner or interested party can pay the outstanding taxes, including any penalties, interest, and costs. Once payment is made, the collector will update the foreclosure list to reflect that the taxes have been paid. How this relates to surplus funds. For finders, this section highlights that delinquent taxes can be paid up until the transfer of the property to the municipality, potentially stopping the foreclosure process. However, if taxes remain unpaid and the property is sold at a tax sale, surplus funds may be generated if the property sells for more than the amount owed. Understanding this process is important for finders, as it allows them to track properties in the foreclosure process and anticipate potential surplus fund opportunities if the property is sold at auction. Finders should be aware that some delinquencies may be cleared before reaching sale, which could affect surplus fund availability. But having a solid grasp of this process enhances a finder's professionalism in the industry. Section 29.45.360. General foreclosure. This section explains the process for general foreclosure initiated by a municipality on properties listed in the foreclosure list. Here's a breakdown relevant to finders. General foreclosure proceeding. The municipality must initiate one general foreclosure proceeding against all properties listed on the foreclosure list. This proceeding is in rem, meaning it is against the property itself rather than the individual owner. Unknown owners. If the property owner is unknown, the foreclosure proceeding moves forward as if the property belongs to an unknown owner. How this relates to surplus funds. For finders, understanding the general foreclosure process is important because it leads to tax sales, where surplus funds can be generated if the property is sold for more than the delinquent tax amount. This section clarifies that properties can be foreclosed on collectively in one legal action, streamlining the process for the municipality. Additionally, finders should note that properties with unknown owners can still be foreclosed and sold, potentially leading to surplus funds. Understanding this allows finders to identify surplus opportunities, even in cases where the property owner is unknown or unclear. Mastering these foreclosure processes enhances a finder's ability to efficiently recover surplus funds and strengthens their expertise in the field. Section 29.45.370. Answer and objection. This section provides a process for individuals with an interest in a property listed in a foreclosure to raise objections. Here's a breakdown relevant to finders. Filing an objection. Any person with a legal interest in a property on the foreclosure list has the right to file an answer or objection within 30 days after the last publication of the foreclosure list. The objection must specify the reasons for contesting the foreclosure. Court proceedings. The court will handle the objection in summary proceedings, meaning the process is expedited and focused on resolving the issue quickly. Prima facie evidence. The foreclosure list serves as prima facie evidence that the tax assessment and levy are valid and that the taxes are unpaid, placing the burden of proof on the person raising the objection. How this relates to surplus funds. For finders, this section is important because it highlights the legal process that allows property owners or other interested parties to contest the foreclosure. If no valid objection is raised, the property can proceed to sale, potentially generating surplus funds if it sells for more than the owed taxes and penalties. Finders should be aware that objections may delay or prevent a tax sale, but once the court rules in favor of the foreclosure, the surplus funds process can continue. Understanding this step helps finders better track the progress of foreclosure cases and anticipate when surplus funds might become available. By mastering this legal procedure, finders enhance their ability to efficiently recover surplus funds for their clients. Section 29.45.380. Judgment. This section describes the court's authority to issue a judgment for the foreclosure of tax liens. Here's a breakdown relevant to finders. Court judgment and decree. In a valid case, the court will issue a judgment and decree to foreclose the tax liens on the properties listed. This judgment confirms that the foreclosure process can proceed. Several judgment. The judgment is several, meaning it applies individually to each lot listed on the foreclosure list. Each lot has a separate lien, and the judgment is a lien on each specific property. How this relates to surplus funds. For finders, this section is important as it represents the final court action allowing the municipality to move forward with the sale of properties due to delinquent taxes. Once the court issues a judgment, the properties can be sold, and any amount exceeding the owed taxes and penalties may result in surplus funds. Understanding this process helps finders track foreclosure cases and anticipate when surplus funds may be available for recovery. It reinforces the professionalism of finders, allowing them to explain to former property owners that the foreclosure and sale are legally authorized once the court's judgment is issued. This judgment is a key step towards surplus funds recovery. Section 29.45.390. Transfer and appeal. This section explains the process of transferring foreclosed properties to the municipality and the rules for appealing a foreclosure judgment. Here's a breakdown relevant to finders. Property transfer, subsection A. Once a foreclosure judgment is issued, the foreclosed properties are transferred to the municipality for the amount of the tax lien. If any objections, answers, have been filed, the court may still transfer other properties on the foreclosure list to the municipality while the objections are being resolved. Certified judgment, subsection B. After the judgment is issued, the court clerk delivers a certified copy of the judgment and decree to the municipal clerk, which serves as the official transfer of the property to the municipality. Appeal process, subsection C. Once the judgment and decree are issued, no further objections to the foreclosure can be raised if they could have been presented before the judgment. However, an appeal can still be made following the same procedures as civil appeals. How this relates to surplus funds. For finders, this section is important because it marks the official transfer of foreclosed properties to the municipality, which is a key step before the property can be sold at auction. If the property is sold for more than the tax lien, the excess proceeds create surplus funds that finders can help recover. Understanding the appeal process is also important for finders. While appeals may delay the finalization of the sale, once the transfer is complete and no further objections can be raised, finders can confidently pursue the recovery of surplus funds. This knowledge helps finders stay on top of the legal process and track when funds may become available for former property owners. Section 29.45.400. Redemption period. This section outlines the redemption period for properties transferred to the municipality after foreclosure. Here's a breakdown relevant to finders. Redemption period. After a property is transferred to the municipality due to foreclosure, the municipality holds the property for at least 1 year. During this time, an individual with an interest in the property can redeem it by paying the lien amount plus any applicable penalties, interest, and costs. Redemption payment. To redeem the property, only the amount specified in the judgment and decree must be paid. However, the property remains subject to accrued taxes, liens, and claims as if it had never been transferred, meaning any additional liabilities remain the responsibility of the owner. How this relates to surplus funds. For finders, understanding the redemption period is important because it provides property owners with an opportunity to reclaim their property before it is sold. However, if the property is not redeemed within the 1-year period, the municipality may sell it at auction, potentially creating surplus funds if the sale price exceeds the outstanding tax lien and associated costs. Finders should be aware that the redemption period delays the sale of the property and, consequently, the availability of surplus funds. However, once the redemption period expires, if the property is sold, finders can assist in recovering any surplus funds for former property owners. By mastering the details of this process, finders can better explain the timeline and procedures to clients, enhancing their professionalism in surplus fund recovery. Section 29.45.410. Effect of redemption. This section emphasizes the role of the municipal clerk in handling the redemption of foreclosed properties. Here's a breakdown relevant to finders. Redemption and release of judgment. When the redemption money is paid to the municipality, it releases the foreclosure judgment obtained under as 29.45.380, effectively returning the property to the owner. Clerk's role in redemption. The clerk or the clerk's designee is responsible for recording the redemption, issuing a certificate that includes the property description, the redemption amount, and the dates of the judgment and foreclosure decree, collecting the recording fee at the time of redemption, filing the certificate as part of the judgment roll. How this relates to surplus funds. The municipal clerk plays a very important role in managing foreclosure and redemption records, which is essential for the proper handling of surplus funds. Once the redemption is recorded, the foreclosure is reversed, preventing the property from being sold and any surplus from being generated. For finders, understanding the clerk's duties helps them navigate the foreclosure process and track potential surplus funds more effectively. This section also highlights the importance of ensuring that all proper procedures are followed and documented. A finder's familiarity with these processes and the clerk's role enhances their ability to communicate confidently with clients, further establishing their expertise in recovering surplus funds after the foreclosure process is completed. Section 29.45.430. Possession during redemption period. This section outlines the rights of the former property owner during the redemption period following a foreclosure. Here's a breakdown relevant to finders. Owner's right to possession. Even after a foreclosure, the former owner retains the right to possess the property during the one-year redemption period. This means the owner can continue to live on or use the property until the redemption period expires. Forfeiture for waste. If the former owner, or someone acting under their control, commits waste, which means damaging or devaluing the property, the municipality has the authority to declare an immediate forfeiture of the owner's right to possession. This gives the municipality the right to take over the property before the redemption period ends. How this relates to surplus funds. For finders, this section is important because it affects the timing and management of foreclosed properties. The former owner's right to possess the property during the redemption period means the property cannot be sold immediately, delaying the availability of surplus funds until the redemption period ends, or if forfeiture occurs due to waste. Understanding the right to possession and potential forfeiture helps finders track when a property may go up for sale and lead to surplus funds. Being familiar with these nuances enhances a finder's ability to provide accurate information to former property owners and anticipate the timeline for potential surplus fund recovery. Section 29.45.440. Expiration of the redemption period. This section outlines the procedures municipalities must follow before the redemption period for foreclosed properties expires. Here's a breakdown relevant to finders. Notice of expiration, subsection A. At least 30 days before the redemption period ends, the municipal clerk or their designee must publish a notice informing the public of the impending expiration. The notice must include the date of the judgment, the expiration date of the redemption period, a warning that all properties not redeemed will be deeded to the municipality and that all rights to the property will be permanently forfeited. The notice must be published once a week for 4 consecutive weeks in a newspaper of general circulation. If no newspaper exists, the notice must be posted in 3 public places. The clerk must also send a certified mail notice to the property owner and any holders of mortgages or liens if the property is valued at more than $10,000. Expiration of redemption rights, subsection B. The right to redeem the property ends 30 days after the first notice is published. Municipality's right to recover costs, subsection C. The municipality can recover the costs of notifying mortgage holders and lien holders, as well as any publication costs, by placing a lien on the property. How this relates to surplus funds. For finders, this section is important because it defines the final step before a foreclosed property is deeded to the municipality and potentially sold at auction. Once the redemption period expires, the property can be sold, which may generate surplus funds if the sale price exceeds the outstanding tax lien and other costs. Understanding the notice and expiration process helps finders track when properties are likely to become available for auction and when surplus funds may be generated. Finders can anticipate the expiration of the redemption period and prepare to assist in the recovery of any surplus funds that result from the property sale. This knowledge enhances their professionalism and ability to guide clients through the surplus fund recovery process. Section 29.45.450. Deed to borough or city. This section describes the transfer of unredeemed foreclosed property to a borough or city, and outlines the roles and responsibilities of the clerk of court and the municipalities. Here's a breakdown relevant to finders. Deed transfer, subsection A. If a property remains unredeemed after foreclosure, property located outside city limits is deeded to the borough by the clerk of the court. Property within city limits is deeded to the city, but the city must first pay any unpaid borough taxes and foreclosure costs. The deed must be recorded in the district where the property is located. Clear title to the municipality, subsection B. Once conveyed, the municipality receives clear title to the property, except for any prior tax liens held by the United States or the state. Municipal use, subsection C. If a city has no immediate use for the property, but the borough does, the city must deed the property to the borough. Conversely, if a borough has no use but a city does, the borough must deed the property to the city. Deed validity, subsection D. A deed is not invalidated by irregularities or omissions unless the former owner was misled to their detriment. 2 years after the deed is issued, its validity is conclusively presumed, and any claims from the former owner or other interested parties are permanently barred. How this relates to surplus funds. For finders, this section is important because it explains the final ownership transfer of unredeemed properties to the municipality. Once a property is deeded, it may be sold, and if the sale generates more than the outstanding taxes and costs, surplus funds may be created. The role of the clerk of court is especially significant in this process, as they handle the transfer of property and maintain accurate records, ensuring that clear title is given to the municipality. Understanding this process helps finders track when properties move from foreclosure to municipal ownership and predict when surplus funds may be available. By mastering these details, finders can more effectively assist former property owners in recovering surplus funds, while showcasing their professional knowledge of government procedures. Section 29.45.460. Disposition and sale of foreclosed property. This section lays out the procedures a municipality must follow regarding the retention and sale of tax foreclosed properties. It clarifies how a municipality can manage foreclosed properties and the conditions under which they may be sold or retained for public purposes. Understanding these procedures is vital for finders, as it affects the timing of potential surplus fund opportunities. Below is a detailed breakdown of this section. Retention of property for public use, subsection A. The municipality must determine through an ordinance whether a foreclosed property will be retained for a public purpose, such as parks, government buildings, or other municipal needs. The ordinance must include the legal description of the property, the address or a general description that sufficiently identifies the location for the public. The name of the last record owner is listed on the assessment rolls. This subsection ensures that the municipality has clear procedures in place for handling foreclosed properties and keeps the public informed about properties that might be retained for municipal use. Sale of property not required for public use, subsection B. If a tax foreclosed property is not needed for a public purpose, the municipality may choose to sell it. However, before selling such a property, the municipality must pass an ordinance determining that there is no public need for the property. Like the retention ordinance, the sale ordinance must contain the legal description of the property, the address or a general description sufficient to notify the public of its location, the name of the last record owner as it appears on the assessment rolls. The municipality must confirm through public proceedings that the property is no longer required for public use before it can proceed with the sale. Notice to former property owner, subsection C. Once the municipality prepares to consider an ordinance about the retention or sale of foreclosed property, the clerk or the clerk's designee must send a copy of the published notice of the ordinance hearing to the former property owner. This notice must be sent by certified mail within 5 days of the notice's first publication. The notice is considered sufficient if sent to the last known address of the former owner, as listed on the municipality's assessment rolls. This provision ensures that former owners are informed about any actions involving their foreclosed property, whether it is being retained or sold. This gives the former owner an opportunity to stay informed and involved, even if they have lost possession of the property. Exception for long-held properties, subsection D. The requirement to notify the former property owner, subsection C, does not apply if the property has been held by the municipality for more than 10 years after the close of the redemption period. After 10 years, the municipality is no longer required to send notices to the former owner when considering the disposition of the property. This makes it clear that properties held for long periods by the municipality no longer require the same notice to former owners, as sufficient time has passed for any claims to have been addressed. How this relates to surplus funds. Understanding Section 29.45.460 is essential for finders working in the surplus funds recovery business, as it governs the municipality's handling of tax foreclosed properties. Here's how it relates. Timing of surplus funds. If a property is retained for public use, it is not sold, and therefore no surplus funds will be generated. However, if a municipality determines the property is not needed for a public purpose and proceeds with a sale, the surplus funds may become available if the property sells for more than the taxes owed. Tracking sales and ordinances. Knowing when a municipality is preparing to sell a property is very important for finders. The notice sent to the former owner and published for the public provides valuable information. Finders can track these ordinances to identify when properties will be sold, which may create opportunities for surplus fund recovery. Former owners' rights and involvement. By staying informed about the process through municipal notices, former owners may inquire about surplus funds after their property is sold. As finders, understanding these procedures allows you to assist former owners in determining their eligibility for surplus funds after the sale. Clerk's role in documentation. The municipal clerk plays a key role in ensuring that proper documentation and public notifications are made regarding foreclosed properties. The clerk's handling of these documents, including notices of hearing and certified mailings to former owners, is essential in tracking property status. Finders who are familiar with these processes will be better equipped to obtain the necessary information about property sales and surplus funds. Conclusion. Section 29.45.460 provides finders with detailed insights into how municipalities manage and dispose of foreclosed properties. Understanding the procedures for retention, sale, and notification helps finders anticipate when properties will be sold and when surplus funds may be available. The role of the municipal clerk in managing this process is particularly important, as proper documentation and public notices are key steps leading to potential surplus fund recovery. Mastering the details of this section allows finders to confidently navigate the foreclosure process, track property sales, and assist former owners in recovering surplus funds when they arise. Section 29.45.480. Proceeds of tax sale. This section governs the handling and distribution of proceeds from the sale of tax foreclosed property. It establishes how the proceeds are divided between municipal entities and the former property owner's entitlement to any excess proceeds. Here's a breakdown for finders. Distribution of proceeds between borough and city, subsection A. When a tax foreclosed property is sold, the municipality must divide the proceeds, after deducting the costs of collection, between the borough and the city that have unpaid taxes on the property. The division is proportional to the amount of municipal taxes owed by each entity at the time of foreclosure. For example, if the borough is owed 60% of the total taxes and the city 40%, the proceeds will be split accordingly. This ensures that both the borough and the city recover their share of taxes owed, based on the amounts delinquent at the time of foreclosure. Former owners' entitlement to surplus proceeds, subsection B. If the municipality sells tax foreclosed property that has been held for less than 10 years and was never designated for a public purpose, the former property owner is entitled to claim any excess proceeds from the sale. This occurs when the sale price exceeds the following: the unpaid taxes on the property, the amount equal to taxes that would have been assessed had the property remained in private ownership, penalties, interest, and costs incurred by the municipality for foreclosing and selling the property, costs of maintaining and managing the property, excluding any revenue the municipality received from the use of the property, excess proceeds. If the sale generates more money than what is needed to cover these expenses, the former owner has the right to claim the surplus. Notice to former property owner. The municipality is required to send a written notice to the former property owner informing them of the excess proceeds and how to submit a claim. The notice is considered sufficient if mailed to the former owner's last known address on record. Claim process and time limit. The former property owner must submit a proper claim to receive the excess proceeds. Upon receiving the claim, the municipality is required to remit the excess to the former owner. However, there is a strict time limit. Any claim filed more than 6 months after the date of sale is forever barred. This means if the former owner does not claim the funds within this period, they lose the right to the surplus proceeds permanently. How this relates to surplus funds. For finders, this section is key to understanding how surplus proceeds from tax foreclosure sales are handled and how former owners can reclaim them. Here are the most important points. Tracking sales. When a municipality sells tax foreclosed property, any amount exceeding the unpaid taxes, penalties, and costs constitutes surplus funds. Finders can assist former property owners by helping them track the sale and determine if surplus funds are available. Notice to former owners. Although the municipality is required to notify the former owner of excess proceeds, it may not always reach the owner if the address on file is outdated or incorrect. Finders can play a vital role by proactively locating former owners, verifying their eligibility for surplus funds, and helping them submit a claim. Time limit for claims. A key element for finders is the 6-month deadline for filing a claim. If the former owner fails to act within this window, they forfeit their right to the excess proceeds. Finders can ensure that owners are informed and help expedite the claim process before this deadline expires. Professional knowledge. Mastering this process enhances a finder's professional credibility. By understanding how municipalities distribute proceeds, the role of the clerk, and the timeline for claiming surplus funds, finders can provide accurate and timely assistance to former property owners, increasing the likelihood of a successful recovery. Property held for less than 10 years. This provision only applies to properties held for less than 10 years after the redemption period closes and that were not designated for public use. If the municipality has held the property for more than 10 years, the former owner's entitlement to surplus proceeds no longer applies, and finders should be aware of these time frames when researching potential cases. Conclusion. Section 29.45.480 provides a detailed framework for the distribution of proceeds from tax foreclosure sales and highlights the former owner's right to claim excess proceeds. For finders, this section is essential because it outlines the legal process for recovering surplus funds on behalf of former owners. By understanding the procedures for dividing proceeds, notifying former owners, and the 6-month deadline for claims, finders can more effectively assist clients in reclaiming surplus funds from tax foreclosure sales. Additionally, knowledge of the municipality's responsibilities ensures finders remain well informed, enhancing their ability to act as trusted professionals in the surplus recovery process. Section 29.45.550. Cities outside boroughs. This section allows home rule and first-class cities located outside boroughs to assess, levy, and collect property taxes. If such a tax is levied, it must follow the procedures outlined in as 29.45.010 to 29.45.500. which govern the assessment, levy, and collection of property taxes. How this relates to surplus funds. For finders, this section is important because it establishes the authority for cities outside boroughs to impose property taxes, which can lead to tax liens and potential tax sales if the taxes are not paid. Understanding that these cities operate under the same tax collection procedures as boroughs helps finders track foreclosure sales and identify opportunities for surplus funds recovery when properties are sold for more than the taxes owed. Finders should be aware that these cities have the same foreclosure processes as other municipalities, making them potential sources for surplus funds. Knowledge of the legal framework under which cities operate strengthens a finder's ability to navigate surplus funds recovery efficiently and professionally. Section 29.45.560. Cities inside boroughs. This section grants home rule and first-class cities located within boroughs the authority to levy a property tax. However, if a property tax is levied, it is subject to specific provisions outlined in various parts of As 29.45, including the assessment, levy, collection, and management of property taxes. The City Council must submit the city's rate of levy to the Borough Assembly by June 15 each year, unless a different date is agreed upon between the borough and the city. How this relates to surplus funds. For finders, this section is significant because it establishes the legal framework under which cities inside boroughs can impose property taxes. These taxes, if unpaid, can result in tax liens and eventual tax sales, leading to surplus funds if the property sells for more than the tax debt. The provisions this section references are essential to understanding the foreclosure and surplus funds process. Cities inside boroughs follow the same rules regarding tax foreclosures, redemption periods, and the handling of proceeds from sales, which can result in surplus funds. By knowing these regulations, finders can more effectively track tax foreclosed properties, identify surplus funds, and assist former property owners in recovering them. This understanding enhances a finder's professionalism in the surplus funds recovery process.